Hello everyone, this is Nick Lump. This video is being recorded on Friday afternoon, August 30th, 2013. And I've been saying all summer that the stock market is losing momentum and we've been in this kind of sideways pullback. So I wanted to show you what I'm seeing and what I'm thinking, and then maybe what could lie ahead for us. So, right now there's a lot going on in the world that is making people nervous, from Syria to the debt ceilings coming up. We have some pretty big elections next month in Europe. And the financial media, they always need a reason for why stocks are falling. And the answer sometimes is that it's just time, or we're due for a pullback because we've been losing momentum and you can't continue higher in a straight line forever. And I think that's really what's going on here. So this really is technical analysis. When we go back to the charts to look at the market's internal strength and weakness, and I'm a proponent of both fundamental analysis as well as technical analysis. And by that I mean, I think it's very important to start with and to have a long-term fundamental investment thesis, but I also like to back that up with the technical analysis to identify in the short term some great opportunities where it might make sense to either sell and take profits or buy more and add to certain positions in markets. So let's go back in time, take a look at the charts here, and let me explain what we're looking at. This is the S&P 500 index, and it's a weekly chart, which means each one of these green and red bars represents 1 week of time. This blue line here is the 50-week exponential moving average. The purple line is a 100-week. Down here, this is something I created to measure the momentum of the market, and it factors in both the last 6 months and the last 1 year of time. And so going back here, this is 1996, spring of 96. What we can see is that while the stock market continued higher and made a new price high, it was also losing momentum. So this divergence over this couple-week period, what it ended up leading to was another few weeks where it pulled back, eventually hit the 50-week moving average here, where I put this circle, and then continued its uptrend and rallied higher. Let's fast forward and look at a few more examples to the spring of 1998. Again, rallied to a new price high while it was losing momentum down here. That led to a pullback, broke through the 50, eventually found support at the 100-week moving average, and then it resumed its uptrend. 1999, same thing occurred, hit the 50, rallied out of that, led to a much longer divergence where it was grinded higher for a few months, but the whole time we were losing momentum. And this is a kind of a classic topping pattern of long-term bull markets where it takes months, if not longer than a year, to top out, while it loses momentum till it finally cracks and breaks and tips over. And then this, after we broke through here to the downside rather than resuming the trend, this led to a 2 to 3 year bear market. Now we take a look at 2005, same pattern here, just a quick little divergence led to a quick pullback, hit the moving average and continued higher. 2007, which was actually the high in 2007, same pattern occurred, broke through to the downside instead of resuming the trend, and that led to the nasty bear market in 2008. Same pattern in 2010, pullback, and then this was the flash crash, but we quickly recovered from that. And that leaves us to where we are today. So take a look at this. We made a high in May, rallied to a new high in July, but the market failed to make a new high in terms of momentum. It has been losing momentum, and so at a minimum I'm targeting that 50-week moving average right now, which is right around 1560, and I'll most likely step in to buy a decent amount of some more US stocks if we get down to that point. I think we will. This has been a pretty reliable pattern. It's not a guarantee, but not something that I think you would want to bet against, considering we've had a very strong run for a good 2 years now. So we could have some more volatility, a little more choppiness in the future, or in the next few weeks really, but nothing to be too concerned about because the long-term trend is still intact. really this pullback would only be about another 4%, not too dramatic, and only about 8 or 9% from the high. And that's just your standard once a year 8 to 10% pullback. So again, this is where I've been expecting this. This is where I hope to kind of step in and buy some more stocks, and then we'll see where we go from there. Hopefully resume the trend for a rally into the end of the year.